Hi, everyone. This is Tim Melvin, and I want to take a couple minutes to talk to you about today's article on value and momentum strategies. For the most part, we took a look at some of the theories advanced by Joseph Lakonishak of LSV Asset Management, who went from a professor who wrote several important studies on the market to an asset manager at LSV Asset Management, and they have combined value and momentum to produce a winning returns over the last couple of decades. In fact, they have outperformed in 75% of the 1 year periods and 70% of the 1 quarter periods over the last 20 years. That's pretty impressive. So much so that they got the Lipper's Best Small Equity Fund Family Award this year. Looked at the article, and Professor Lakonishak looks at things like deeply undervalued stocks that are starting to show some price momentum and moving higher as an indication that the market is starting to recognize the undervaluation of a particular company. As I said, it's been very successful. Now, he uses several other variables and factors in his research, such as price to sales, price to earnings, price to cash flow, and several other technical and momentum indicators as well, including such things as positive earnings surprises, sentiment changes, and he also looks a little bit at insider activity as an indication that the momentum in a deeply undervalued security is about to shift. We're going to take a look at some of those things over the next couple of weeks and see what kind of interesting and potentially profitable ideas this might produce for us. Now, one of the more important concepts was introduced very, very briefly at the start of the article, and that's combining value and momentum as separate independent strategies into a blended portfolio. Cliff Asness of AQR Capital Management has done a lot of work with this and just came out with a important new study called Value and Momentum Everywhere. Now, what he found in his paper was the two variables that always worked were the momentum, price and earnings momentum variables, as well as the deep value variables. So investors should probably leave the middle of the market alone and combine their interest in those two opposite ends of the spectrum strategies. You can pick one and favor it over the other, but what he found that is really important is that value and momentum both work. They both beat the market over time, but they're not correlated. So in other words, when value's doing very well, momentum's probably not doing so good. When momentum's doing great, value is usually lagging behind. One zigs when the other zags. Now, what this does is give you a chance to put together a high-performing portfolio that beats the market, but also reduces overall volatility. It sounds like an investor's pipe dream. However, it's such an unusual combination of factors that it just might work and work very well going forward. Usually value guys want nothing to do with momentum. Momentum guys want nothing to do with the value player. So if we put these together, then we have a potential home run investing package. Now, this suggests to me that if you took, say, some of my picks, my deep value picks, and deep price to book value discounts and net stocks and small banks that I've talked about here on Investor Place, and combined it with, say, perhaps the stock picks of a Louis Navellier, who also writes on Investor Place, and of course has some newsletters that have been market beating products for decades now. If you were to combine those together, deep value, Louis' quantitative price and earnings momentum style, split them 50-50 in your long-term accounts like IRAs and other such things, and then rebalanced annually, you could possibly have a winning combination that beats the market with lower volatility for years to come. It's worth investigating and giving some thought anyway. Anyway, thanks a lot for listening. This is Tim Melvin. I'll talk to you guys again real soon.